And welcome. Today we're talking about a major geopolitical event in early 2026, the crisis in Venezuela, and how it's reshaping global oil markets. Once a dominant petroleum exporter, Venezuela's oil sector has been at the center of global energy strategy for decades. But recent upheavals have reverberated far beyond Caracas. Let's unpack why this matters for oil prices and for economies around the world. Part 1. Background: Venezuela's oil legacy, 045 to 130. Venezuela holds the world's largest proven oil reserves, roughly 303 billion barrels, even surpassing Saudi Arabia's reserves. Allianz Global Investors. Yet years of underinvestment, mismanagement, and sanctions crippled production, pushing output under 1 million barrels per day, about 1% of global supply. Outlook India. Despite that modest share, the country's strategic importance lies in its reserves and its potential to flood markets with heavy crude once stabilized. Part 2. What's happened in 2026, 130 to 3. In early January 2026, a dramatic escalation occurred. U.S. forces captured Venezuelan President Nicolas Maduro in a controversial military operation. CJEP. Shortly after, the U.S. government announced plans to exert control over Venezuelan oil sales and revenues, even diverting tens of millions of barrels to the United States. Axios. This move aims to revive production, open Venezuelan oil to U.S. and allied companies, and reshape trade flows away from China. Time plus one. On the production side, Venezuela's state oil company PDVSA has cut output due to dwindling storage and export constraints tied to the crisis. Reuters. These developments have immediate and longer-term impacts on the oil price dynamic. Part 3. Immediate market reactions, 3 to 4. In the days after the U.S. action, oil prices edged slightly higher in some sessions as traders reassessed geopolitical risk in Venezuela, but overall reactions have been muted. Reuters. Why so muted? Global supply. Oversupply. The world currently has a large supply surplus, with production from the U.S., Brazil, and Guyana absorbing much of the risk. Financial content: Venezuela's limited current output. Venezuela's crude output